Guys, we'll be starting the session in next 30 seconds or so. Some participants are still joining in. Good morning, everyone. Welcome to today's session of Pre-Well with William O'Neill India. I hope everyone's doing well. And before I take you through to the Nifty 50 chart placement and other slides of today's Pre-Well session, I'd like to give a small disclaimer that any security that we might discuss in today's session should not be considered as a buy or sell recommendation, and we are just doing it for educational purpose. So let's start with Nifty 50's chart analysis. So talking about yesterday's movement, uh, Nifty had a very muted opening if you look at yesterday's candle. And post that, the high for the day and the opening was very close. If you look at these levels, like the opening and the high for the day was very close. And then the sell-off, probably initially it was a minor sell-off in the first couple of hours of the day, and post in the last couple of hours, the sell-off just intensified. And if you look at it, the closing for the day uh, was at the low. So it was like a very bearish candle if one looks at it. And what was more prominent that even the 200 DMA got breached. Uh, so probably the global markets are under a sell-off. The US markets are probably continuously on a falling streak. On Friday as well, it came under a good fall post. Strong jobs data. The non-farm employment data, the your unemployment data, both of them are very strong. The new jobs added as well as the unemployment change. So which leads to probably a higher probability of more 50 to 75 bips rate hike in not in a 50 bips, even a 75 bips rate hike for the next meeting at the US Fed as well. So considering that probably some market weakness is bound to happen in the Indian markets as well. And yesterday, probably your Nifty breached the 200 DMA as well. But the good part is that we are still in the rally attempt according to the O'Neill methodology. And why? Because the previous low, which was around the 16747, that is, these levels have not been breached up till now. If those levels get breached, we'll go back to a downtrend. And probably this pink line that we're talking about, that is the 100 DMA, is acting as a strong support at the moment for Nifty. If probably Nifty breaches this 100 DMA, then there can be some kind of selling pressure, and probably Nifty might go down. The next support might come in near the 15,900 to the 16,000 levels as well. On the flip side, probably if we get a follow through day, uh, then probably markets can see a near-term rally as well. So, what's the take on this is that when probably markets are this kind of volatile, and even on before the weekend, we released an article whether the market is at an inflection point, that is like, can we see a boom or a bust? So probably we are in that kind of phase where probably uh, markets can probably, if some crucial levels are breached, it can just spiral down and go down to a downtrend, or probably like a follow through day happens, and probably some key moving averages are retaken then probably we can see a strong rally as well. So when it becomes more important when the times are jittery, when the times are volatile, to probably follow your rules, keep your rules intact, so that at this time it's probably not the time to bottom fish, and probably not to get your hands burned, and wait at the sidelines till the point your rules such as your William O'Neill's rule suggests that the markets have entered a good phase, like a confirmed uptrend, to enter into the market rather than just going for small uh, uh, rather than going for this small entry and exit into the market. It's better to stay there. So talking about the key news, as the result season has started, and the TCS has reported its results. The other IT majors such as your HCL Tech and Wipro will be reporting its Q2 and FY23 results today. IMF lowered India's GDP growth forecast for FY23 by 60 bps to 6.8%, and FY24 forecast was unchanged at 6.1%. Still at 6.8% and 6. Like at 6.1, we are still the fastest growing nation, and 6.8 will just behind Saudi Arabia for FY20. Brent crude oil prices is down around 5% in the last 2 days. GPPL Q2 container volume grew by 80% YOY and was down by 0.5% QOQ. Delta Corp's Q2 FY23 PAT was at 68.3 crores versus loss of 22.6 crores. Revenue grew to rupees 270 crore versus 75 crores YOY. Indian Railway Finance signed an MOU with India Infrastructure Finance Company to strengthen cooperation in finance railway infrastructure projects. So talking about the global markets, it was a mixed setup. If you look at it, if you look at the Dow, it was up by 0.1%, but your S&P 500 and Nasdaq was down by around 0.7 to 1.1%. Talking about the Asian markets, even Nikkei and Kospi is trading very like in a range bound or in a volatile manner, where Nikkei was up by 0.1%, Kospi down by 0.2%. However, the Shanghai market is in a downward trajectory and is down by around 0.9%. Talking about Brent crude oil was trading at around 93.7. USD INR have also cooled off a bit, like it has appreciated minorly, like from 82.8 levels to 82.3 levels. Similarly, US 10-year Treasury yields have also cooled off a bit. It was trading more than the upwards of 4% trajectory, like around 4.0 to 4.1% is cooled off to 3.945%. However, the 2-year 10-year Treasury yield still continues to be inverted. Talking about SGX Nifty, around 8:35 time, SGX Nifty was trading at around 16,976 and was very close to yesterday's close of 16,983, and that's why at the moment SGX Nifty is indicating a muted opening. So talking about on the sector front, you can see major sectors coming under the market sell-off or the market pump at the moment, and Nifty Pharma is probably the only one which is trading above its 50 DMA and 200 DMA. Otherwise, as you can see, major indices, even your FMCG index and the auto index, which is probably had good support in the last rally, has come into the market sell-off as well. If you talk about major indices such as, the key component of the Nifty 50, even that's the Bank Nifty, that is also trading around 1.2% below the 50 DMA. If we talk from the 200 DMA perspective, major indices are still holding their 200 DMA. It's just, as you can see, your Nifty IT that has been a laggard, and it's been trading 200 DMA 11.7%, almost 12% below its 200 EMA, which is probably not a good sign at the moment. And even Nifty in energy, it's trading around 2% below its 200 EMA. Probably, these are the times uh, William O'Neill suggests that during bear markets is the time where your excess liquidity gets cleaned up, and probably we can see new set of leaders emerging at the moment during for the next phase of the rally. So these are the times we need to study and watch out for and see which sectors and which leading stocks will be leading the next set of the rally. That is. Which stocks and sectors fall the least are probably able to recover the most. That is, which sectors and stocks probably don't breach or like very minorly breach the key moving averages, and who are the first to probably recover these key moving averages, such as your 200 DMA and 50 DMA, and the leading stocks within the same sector as well. So, thank you, and that's it from my side. And do stay tuned and do connect with us on the pre-bell session daily at the 8:45 a.m. mark and the after our session at the 4:30 p.m. mark. And connect with us tomorrow to answer all your stock and sector specific queries at the stock darbar at 4:30 p.m. tomorrow.